Okay. Yes. So on this list, we have the propulsion block, breaker block, reclaim block, and mitigation block. I actually wanted to start with putting everything we've learned together by studying the chart, but this is already weekend. This is already weekend, so there won't really be much playing out in the forex market, even though we can analyze crypto share, but I just think we should wait till next week. So from next week, Monday, Monday night, we are going to check some pairs that might represent opportunities for us, and we're going to trade them. If we find any opportunities that are cool, we will trade them on our $10 account as we discussed the other time when we just started. Okay, so that's basically what we're doing from next week Monday. So hopefully from our daily analysis, we are going to be getting more understanding, both as we are analyzing in class and as we are applying on MetaTrader on our own every day. So yeah, all right. Starting with propulsion block. All right. So the propulsion block. The propulsion block is an order block that mitigates the initial order block. After a propulsion block is formed, it acts as the new order block. Okay. So now what does that look like? What does that look like? So if you go to the chart now, go to the charts, all right, and let's say you have, at least I can just use one to do this. Let's say you have something like this, right? Let's say you have something like that. Let's say you have something like this, right? Okay. And assuming that this is the last down close candle before this upward move, assuming that this is the last one down here, all right? So that is our order block there. Okay, so this is our order block. So once price comes down to hit that order block area, so the price has mitigated that order block. If price should continue higher, right? If price should continue higher, it will not come down to this initial block again. This will not be the order block that price will respect next time it comes down. The new order block will be here, the other block that formed here. Okay. Oh, mistake. Sorry. The new order block will be the guy that forms down here. Okay. This thing is not doing what I wanted to do. Yes. So instead of respecting this one now, okay, price is going to respect the other block that mitigates the initial one. Okay. So since the range has changed from this range to this new range, the new range is now where the new order block will be taken from. So this one will be the new order block, and that is what we call a propulsion block. All right, so that's what we call a propulsion block. So it's not always this initial guide that will be respected. Okay. The next time we're going to respect the propulsion block. So propulsion block keeps on shifting and shifting and shifting. Okay. So we keep on having more and more and more propulsion blocks as we go on. So we could have another one. Okay. Price could drop again and keep moving. Okay. So then the new order block will be the next propulsion blocks following the same fashion. Okay, so this will now be the new order block that will be respected, and so on and so forth. Okay, so as the range is changing, don't expect a situation in price when if price has gotten created a new range yet to still come back and fulfill this other block. No, it doesn't work like that. It just keep taking the other blocks that mitigate each other. Okay, so the propulsion blocks. All right. So that is how it works, guys. That's how it works. That's how a propulsion block is. That's what a propulsion block is. Okay, so let's try and see if we can find such in the chart. Okay, so evidently you see it, of course, you will see it obviously. So once you look into the chart, okay, you notice the thing I'm talking about. So this is our initial order block here. Okay, so that seemed to be okay. So it was taken out, sha. It was taken out. Let me see if I can find a better example. But now let's just assume that that is the other block. We'll find other examples later. Then this one will be the next other block to be respected. Okay, this one will be the next other block to be respected. After that guy, so this guy is the propulsion block. Okay, so once this guy gets mitigated again, the next guy will be the propulsion block. All right. After this guy gets mitigated, the next guy will be the propulsion block. All right. So we don't expect that if price has reached this area and that mitigate different other blocks, you won't be expecting price to still come down to this initial one to mitigate it before continuing the uptrend. Okay. So price would respect the propulsion block and not the initial order block. You can see various examples on the chart. You can see various examples on the chart. Look at this place. We have an order block here. All right, I have another block here. Okay. So that other block is mitigated by this one right here. This tiny green guy. This tiny green guy. Let me point to it. This other block. Yeah. You can see that green other block. So that is one that mitigated the previous other block. So he will now become the new propulsion block. That is where the next range will mitigate. Okay. That's where the next range will mitigate. Okay. So the next time price will come inside, it will not come inside and go all the way to this guy. No, do not go all the way to that guy anymore because this guy has already mitigated him and we have formed a new range. So it will respect the new range order block. Okay. So it will keep following that fashion and we will keep going down like that as we create newer and newer and newer order blocks. So that's basically how the propulsion block works. That's basically how it works. Okay, so I will end the examples here so that we can move with the speed of light. By next week, I want us to be um doing basic trading. Okay, basic trading. For those people that just came in, I said that from next week Monday, we'll start using that $10 capital that we spoke about at the beginning of the class. So we'll just use it and test. Nothing may come out of it, but something may come out of it as well. It's just for practice. Okay, so if you have not deposited it, you can use your demo account. Nothing wrong with that. So yeah, that's the propulsion block. Sha. At the end of the when I finish all this, we'll talk more. I would give you guys a chance to ask questions. But for now, let me just run through everything. So the next one is the breaker block. I'm expecting you guys to be taking notes, because these things are important. Okay, these are important distinguishers in price. So the breaker block. Okay, um, the breaker block. Okay, breaker block is an order block that takes out liquidity. Liquidity. Okay, so it takes out liquidity. Oh, okay, let me see. Then another block that is formed right before liquidity is taken out and a reversal occurs. Okay, so the breaker block is what is respected if you have a liquidity run and the price still comes back to respect it. You will not understand, but an example will give you a good idea. Example will give you a good idea, right? So uh let's look for a breaker block. Let's look for a breaker block. Look for a breaker block. So let me just give you the concept first. Let me give you the concept of a breaker block before we move on. So um let's say we have let's say we have a trend. Let's say we have a trend, just like this, okay? And suddenly what we have is this high is taken out, okay? So the trend is still going on well. But then suddenly it creates a reversal, okay? It creates a reversal. So it breaks market structure to the downside. So a reversal happens here. A reversal, or let me use a call out. So at this place, there was a reversal. Okay, so there was a reversal at that point. There was a reversal at that point. Okay, so um, most times if we have a very speedy movement like this, okay, if we have a very speedy movement like this, we will not expect price to respect something like here. Okay, because this is a reversal, and a reversal has different conditions. So instead of targeting this other block as a place that will sell, okay, price is likely not going to go up here to sell because this is a manipulation, and the market makers will not want to give people that were trapped in here, they will not want to give them chance to easily recover. Okay, so the price will not run inside here. Instead, there will be an order block that will form somewhere here just before the price got run out. Okay, just before the price got run out like this, just before the price got run out, that will be the breaker block. That's what we call the breaker block. So it breaks structure. Okay, so it runs out liquidity. So instead of reaching here, this is where price will come into. The price will come into the breaker block before selling. Okay, so that place we call it, that kind of order block, we call it the breaker block. The breaker block. Okay, all these things you may not remember every of them until much later, but you need to give yourself the time to study all these things, okay? Because each of these other blocks have different conditions, right? So practice. I said before, practice is the key. Okay, practice is key. So the breaker block will form here, but sometimes um, you may not see something like this there. It may just straight run it out. It may just run it out straight. All right. So it may be straight like this. You run it out very straight and fast. Okay. So if there's um, no small hiccup here, that means that the breaker block is the first one that started that up move. Okay. So it's always the last down candle before liquidity was taken out. That is the breaker block. Okay. So in that case, this is where we would look for our trade. Okay, so that would be our breaker block. But most times you might see a little bit of um hiccup here, a little bit of consolidation or retracement or whatever to be there, and that's where our breaker block will lie. Okay, So once we find our breaker block there, we will sell from that area instead of waiting for this entry that will never come. Okay, so that is the breaker block. So let's look for examples of the breaker block on the charts. So I'll try and find two examples. Two examples, right? So yeah. So zooming in here.
I think if you check Solana, you should be able to find because on lower time frames, I maybe like 1 minute, 5 minutes because I do so much.
So this is a breaker block, but it's on a lower time frame. So I won't really use it. I won't really use it. Let me just um looking for a certain type of condition. That's like what I explained. Okay, here we have a stop run. Okay, you can see a very nice stop run here. Very nice stop run. A very nice stop run. Okay, so over here, liquidity was taken out, dollars. Okay, so that was taken out, confirm. All right, so price starts to follow the other way. Price starts to follow the other way. Okay, so right before this liquidity was taken out, right before this liquidity was taken out, there will be something forming. Okay, something will form as another block. What's the other block that forms, or the candlestick, the down candlestick that was prior to the run on price, is the breaker block. So could you have this one as the breaker block in this case? Okay, you have that guy, that red candle over there. So this guy is our breaker block. So what we had here is that price ran major liquidity. Okay, we ran major liquidity, even though most times this movement is usually very fast. This one is a little bit slow. It's usually very fast. It just happens boom boom, and it uses the breaker block. So you can see this is one example. All right, so let's try to find another example on the chart. Let's try to find another example. um there'll be something like a mitigation block here. That's not what I'm looking for.
The thing about Solana for most times when you get quicker blocks, they're usually on the lower time frame, maybe like 15, 5 or 10. But that's why it's being used on every. You might not really see them on huge time frame like this because of consolidation and intro perspective.
I feel that it can actually be seen everywhere you grab. It's just that on a higher time frame now, things take slower to form. A bit things take more time to form, so you may not see as many examples as you might want. So that's just the thing. And here you can see potential breaker block here as well. So we have price running out a high, two highs as a matter of fact. Okay, so this one here was taken. This dollar here. Okay, let me shift down. So that high was taken as well as this one that is here. Okay, so price ran it out. So before price just tip his head above it, there will be a bearish order block or a down candle. Sorry, down candle.
How about this move up
Which
to
one?
slow?
Uh,
You know the last low after the week there.
this one.
No, the next low. In the middle, the one in the middle.
This one.
Your right, your left rather, left.
This one.
So after that week, that last low after the week,
Last low after the week. This one.
yeah, that low.
Okay.
So like you can see that something came up there. So can you call that a breaker block?
No, this is not a breaker block. This is a mitigation block.
I mean, after price created that low, it went back up to the upside. That part they marked liquidity there, then broke the downside.
Yeah.
It came back to test that low, then broke surface to the downside again. Because I'm asking if it's a breaker block.
Sorry. I'm trying to go where I'm saying. Am I even at the right place? Okay. Okay, so you said we had this move up, then we broke down, right? And then we came back there to
That I'm talking of the high before that.
this high.
No, not that high. The next high, the
This
next
one.
lower high,
Next lower high.
the next lower high.
This one.
The eye in the downtrend.
This
Yeah,
one
that
here.
Yeah, that one was a propulsion.
Okay. This one is not really. But let me look at it first. Let me look at it fully. Okay, yeah, you can actually count this thing as a breaker block for this one has something more complex that I'll put under secondary inducements. Okay, so it actually uses the breaker block. Okay, but initially up here there was a mitigation block, but it's very small. You might not see it. There's a tiny mitigation block here, but as soon as it broke lower like this, as soon as it broke lower, then it used the breaker block that is in here. It used this breaker block. So yeah, you're correct. There's a breaker block right there because it also took this high over here. There's this tiny high that it took out. So after taking out those highs, it's reversed the other way. Okay, so this this is a breaker block inside here. Let me zoom in. This red candle from top to bottom, that area is our breaker block territory. So yeah, that's accurate. Nice spotting. The how will I put it? Nice one there.
thanks,
Please,
boss.
Sophia, zoom it out so we can see the like how it
Out
moves.
or in.
Like zoom it out, like make it bigger so we can see what are actually happening.
Okay. Okay, look at it. Look at it. Okay. So let's ignore this one. This is a mitigation block. Let me not call it. So what happened there is that um we had we had a high here. Okay. We had a high over here, right? So price went above that high. Okay. They mitigated something here, close an imbalance, whatever. Mitigated something here. Then quickly change trend. If you go on the lower time frame, this is a strong trend. This uptrend, there's a very strong trend. Okay, so once we go like this, that's the reversal of this trend. Okay, so once we move fast downward, all right, that's the reversal. So the last down candle before that upward move happened, the last down candle before this aggressive move happened, that is our breaker block, which means this red candle, this red candle, all right, this red candle, that is the breaker block. So that is what the guy was pointing out to us. That's what I don't know who spoke, Sha, but that's what he was pointing out to us. Do you understand?
Yeah, sure.
Yeah. So that is a breaker block example over there, as well as this one right here. So this one spiked up. Okay, so right before that move to take out this high and the other high at the left. Okay, so there's two highs I took out. So there is another block there. So we'll combine these two, one, two. Okay, one, two, so that we get from the bottom to the top, right? So that will be just one other block on the 2 hour time frame. Okay, so we'll count them together as the breaker block. So if we extend it out, that will be our other block. Instead of waiting for something here, okay, this will not be your other block because of what happened here, because of the situation that happened there. You're not going to use the initial candle that started the trend. You're instead going to use the breaker block. So that is how the breaker block works. So I think we have had 3 examples so far. Okay, so we'll be seeing more of these things later when we start trading. But I'm assuming that this concept is well understood by everybody. Let me pause here. Does anybody have questions of about proportion and breaker block? Anything confusing about any of them before we move on?
Yeah, please can you go over proportion block? I didn't really get as much of
You
what
watch
you said.
recording now.
Yeah.
You watch the recording.
All right.
Yeah. Okay, so no question now. All right, we'll move on, Sha. Um, we have reclaim block, reclaim block, reclaimed block. Okay. There's quite a story behind how reclaim blocks are formed. Let me try and see if I can recite the story, even though the story is not what is important, Sha. Um, so a reclaim block is an area in price where institutions institutions were taking profits on the previous trend before previous trend before they before they switched gears and changed the direction of the trend. All right, so that is basically the reclaimed block. That's basically the reclaimed block. All right, so um, it can it can easily be identified as the um how do I put it, last last down candle, last down candle before an uptrend was reversed, and the last up candle before the downtrend, the downtrend was reversed. Okay, so I think recurring blocks are a little rare. Okay, they're quite rare than the rest. Okay, so um, how do I identify this thing now? So basically, the concept of the reclaim block is that let's say we had a downtrend coming down like this. Okay, we had a downtrend. Okay, so the trend was coming down. Okay, so if the trend suddenly reverses, okay, the trend suddenly reverses, um, we might start using the previous other blocks that should have held price. So let me say there were bearish order blocks in all of these. Let's say there are bearish order blocks in all these places. All right. So all these places, the bearish order blocks that were used here, they can later be reclaimed for the new trend. They might later be reclaimed for the new trend. They might later be reclaimed for the new trend. All right. So you could have something like this happening. So you might realize that this other block might now start working for this new trend. Okay, so this is similar to like support stand resistance or resistance top support. So it might start respecting those things. So that's why I call them reclaimed order blocks. So they are reclaimed by price. They are reclaimed by price, right? So those order blocks that are old will now start acting as the order blocks for a new trend. Okay, even though it might not happen very often, but sometimes you might realize that you not just need to look at this range, it might go to the previous range, especially if we have a very big imbalance at these places and the trend is very strong. It might ignore all these ones, might ignore the other blocks that are supposed to form here, might ignore them, okay, and instead use reclaim block at the other side of price. All right, so yeah, that's basically how reclaim blocks work. That's how reclaim blocks work. I personally don't even have much experience with reclaim block. I think what I usually use that is similar to it is a mitigation block. A mitigation block. All right, so I'll try to find some examples. Okay, even though I'm not sure we'll find many of them. I'm not sure we'll find many of them. I'm not sure we'll find many of them. Let's see.
Sorry, boss. What's the difference between a breaker block and a reclaimed block? Because it looks like they kind of offer similar opportunities.
Yeah, they offer similar opportunities, but another block happens just where we have a liquidity run. Okay, but a claim block on the other hand may not be just it will not. Let's say this is where we had the liquidity run. Okay, so let me say here this place was a breaker block, but if we start respecting the previous order blocks on the part of the trend, and it is not a situation of a liquidity run or a manipulation, that would be a reclaim block. All right, so all these ones that are forming over here, they are reclaim blocks. Why you may call this one, let me say I would call this one, technically this one will be another block. Sorry, breaker block. What am I saying? A breaker block. Okay, while the rest that start forming later on, okay, these ones will be reclaimed blocks because they are forming based on what the other trend has done. So they are reclaimed from the previous trend. So that's basically it. Control C. So yeah, that's the difference. That's the difference. Even though I don't usually use the chart because it's quite ambiguous to me. I don't go to the chart and start looking for a claim block. What I use is breakers, I use mitigation blocks. Okay, so all these things is just very, very crazy. Ouch.
Yes.
So
Don't worry, you
let's
said
try and find
we
it
are crazy.
out. No, this year I say all this thing is very crazy. I this year I'm crazy.
Yeah,
Oh.
someone is answering quiz.
Someone is answering
Yeah.
Chris.
I thought it was calling my chief.
Yeah, someone thought you are calling him,
No, no, no,
so
no,
you
no,
said we are crazy.
no, 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 no. I beg you. I don't insult people like that. Okay. So I might call this one a reclaim block. I don't know what I'm doing, oh, so make una no vex, I beg. So this reclaim block, I have issues with it because I don't use it. And that's what I usually tell you guys. If you don't practice something, you will not know it. So what I know it well. But what I don't know, I'm not sure I really know it. Okay. So, but basically, what I'll do is that I'll give you guys. I think ICT is posting some of his core teachings from 2016 on his channel. So if he has released it, I will send you guys a link. But if he has not released it, then I'll have to um how will I put this? I'll have to find one of them from my system to grab. But basically, I don't know much about replaying block. Let me be
Wait,
honest.
these areas that you marked, those areas that you marked, I think I'm not sure. They should be reclaimed
They
block.
should be reclaimed block, but me, I'm not sure. That's just what I'm trying to
The left,
say.
the
The
left.
left, yeah,
The previous showing today.
this one.
The left of those blocks that you marked. Yeah, so I think looking at
Okay.
it,
Oh, you have eyes, my guy. That's true. That's true. That's true. This is basically what we're looking for. Yeah, 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 yeah. So this one, yeah, yeah, that's right. So over here we're taking these ones. Okay, so these are our reclaim blocks in this scenario. So the last other blocks in here. Let me zoom in a bit. Okay, so this is a downward move. So this the last bullish candle in there will act as a reclaim block. I usually use reclaim block though, but only um in the basis of FQM. There's something called FQM that we'll speak about later. Okay, so like I said, usually happens when there is very great speed and the trend is very strong. Okay, like you can see here now, when the trend is strong, it might not come down to validate or close all these imbalances immediately. Okay, so we're not come here to mitigate this other block down here because the trend is strong and we are aggressively trying to get to a certain point, to a certain area of liquidity. So that price is aggressively trying to get to this place. Okay, so until price gets there, it may not have any intention of coming down to close all these imbalances that have left here. Okay, so it left an imbalance in here. Okay, instead of coming to mitigate this place, it mitigated the last the last up candle in this downtrend here. Okay, that is what it went to mitigate. Okay, it mitigated this guy as the reclaim block. Mitigated this guy. Okay, so it happened there as well. We have another imbalance that was not completely closed in here. We have another imbalance in here. The price refused to fill up like that. Grab, and you can see the last up candle in here that we left and reclaimed it. So we came to reclaim it instead of coming down to our sponsor candle or our other block that will probably be here or to be somewhere down here. Okay, so instead of coming down to those zones, it's just use the previous high and then continue the trend. So that's basically how reclaim block works. So reclaim blocks usually happen if there is a very quick movement and imbalance in there. Okay, sometimes it might not fill in the imbalance, and if it does not fill in the imbalance, um, 7/10 times it is using a reclaim block instead of that. I've not gotten to that level of confidence of just using of just buying a reclaim block once price touches it. Okay, what I usually do is that I'll wait for a small break of structure, so what they call MBOS, something like this. Now you can see this place inside here. So once you touch the reclaim block, okay, and breaks this small area of market structures there, I can now buy on the new wave that are going up because I know that this reclaim block has reacted. But I don't usually use reclaim block because I don't have much experience with them like that. So I don't just buy it immediately. I wait for some form of reassurance that that reclaim block is going to work. So that is how reclaim block works. That's how reclaim block works. Thank you to the guy that gave me this example. I think that's Chidi. Abby? Or it's not Chidi.
That's Chris.
Praise. Okay. Sorry. Praise. Thank you, my guy. All right. So we'll move on to the next. We'll move on to the next one. Uh, nice. Mitigation block. Okay. So mitigation block, mitigation block, mitigation block. Mitigation block is the other block that is formed when price moves to mitigate an important structural structural point before resuming the trend. It is it is very similar to a breaker block, a breaker block. But the only difference is that a mitigation block doesn't 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 take out liquidity. Doesn't take liquidity. Doesn't take liquidity, but mitigates structure. Structure. Right? So that is the mitigation block. That's the mitigation block. So how does it look like? How does it look like? So we go to this, right? So let's assume that um we have a trend moving like this. So sorry. Let's say we have a downtrend. Okay, so let's say we have something like this now. Something like this happened. Okay. So there was somewhere in structure. Let me assume that maybe this is another block inside here. Okay, so it's got mitigated. It got mitigated. Okay. And after it got mitigated, price aggressively moved lower. Okay. Price aggressively moved lower. So you can see that instead of in the case of a breaker block where we have liquidity being run out, okay, and then the breaker block is used to continue the trend. In this one, there's no liquidity purge. It just goes to mitigate something, okay. So the bearish candlestick that forms right before this mitigation is what we call our mitigation block, okay. So if these are all up candles going up here, all right, and there's one black or one red candle down here that forces them, that shoots up, or that makes the trend to shoot up this way to mitigate this structural point. That's what we call our mitigation block. So we will not expect price to come up in here. We will not expect price to come up in here to continue the trend. Okay. So we would expect price to use the mitigation block before continuing lower. Okay. So price will use the mitigation block before going lower. So that is how a mitigation block is. Do you understand the difference between a mitigation block and a breaker block?
I don't think I understand it because I'm not really sure um, mechanism behind it. If or like if you can maybe let me ask you something. So with regards to mitigation blocks, do we usually see a reaction of that breaker block before a continuation? Like Like maybe if you look at it on a lot time frame, or see price coming into the block on the top, then you react to it, then break down. So instead of using the breaker block, the block that forms that reaction is that the mitigation block.
Yeah, the block that forms down here. There may be uh smaller blocks in here. There may be smaller mitigations inside here. There may be smaller things occurring here on the lower time frame. Okay, but if price breaks down, okay, and forms or continues the trend, all right. So in a breaker block now, the trend reverses, but in this case now, it's continuing the trend, continuing the downtrend. Once price breaks down, once it's trying to retrace, we expect it to use the mitigation block and not the initial order block that's up here. All right, or any, like usually you not find any smaller thing here. I'm saying if they are just green candles pushing up into this place and then there's a red candle down here, that red candle is a mitigation block. I guess you don't get it. Let me try and see if we can find some examples on the charts. Let's see. Yeah. So this is our order block up here. Abi, we agree that this is our bearish order block, right?
Yes.
So you can see that there are two candles moving into that place. There are two candles pushing higher, all right? So right before we pushed higher into that zone, okay, there is this bearish candle that is forming there. It's called a mitigation block, all right? So the one that pushes, okay, in the case of a breaker block now, this trend now will go above that high, okay, to go above that high, then come down, okay, and then use the breaker block as an area of resistance to continue going lower, all right. But the breaker block and the mitigation block are very similar, but the mitigation block does not take out the liquidity of the current uptrend, all right. This it just mitigates this and then falls lower, all right. So that's basically the difference between a breaker block and a mitigation block. So looking at the down candle that formed before that mitigation, which is this guy, all right, the guy is going to be respected here. So it's respected here. So when it broke down below it, it was used to continue lower, okay, and then price now used this guy as the new order block, as a propulsion block, like we spoke earlier, and then continued lower. All right, we now continued lower. So later on in the trend, price still came up and probably used this guy as the new propulsion block because we have they did not touch that guy. I'm guessing it's my easy 3 or something like that because we have this new propulsion block up here. All right, so that is now what price to use. But initially, when price broke down, it will not go up to, let's say, there's suddenly going to be, if we go down a lower time frame now, go down to, let me say, the 3 minutes chart. Go down here, and move back to that area where we were. Move it back here. Oh, we didn't get to that area. Okay, let me use 4, 5, 5. Okay, so when we go back into this area, Okay, so you can see that the other block that would be in this place, okay, the actual order block in that trend is supposed to be this guy. Okay, it's supposed to be this guy, right? It's supposed to be that guy. Okay, so that's supposed to be the order block, but price never came up into that place. If you're waiting for this order block here, you never get it. Okay, you never get it. So price used the mitigation block. Price used the mitigation block to continue lower. Okay, so looking at this time frame now, we can refine the mitigation block to this other block here. Can refine it to this guy. So that's this down candle here. That's the mitigation block according to this time frame. Right. So basically that's just it. Okay. So if price goes to mitigate, so basically with the mitigation block, this is what it looks like coming again. We have we have a trend. We have a trend. Okay. We have a trend. Okay. So let me assume that this was a rushed move upward. If this move rushes upward like this and you just see green candles, like one big green candle just rushed all the way to mitigate this place. If we break down like this, we'll be expecting the block that is here, the other block that is here, to act as a mitigation block to continue the trend. Okay, we will not expect price to go up into this place. It's supposed to just stay down here. But if the mitigation block can occur anywhere, okay, but the other block that forms last before the structure was mitigated, right? So it might form like this, okay? So mitigate it there and continue. So that's the mitigation block. That's the mitigation block, right? So we would have something, in this case, the mitigation block will rest somewhere here, while in this case, it will rest somewhere here. Okay, so let me try and find one or two more examples of the mitigation block before we move on to the next thing. Let me try and find one or two more examples. Guys are seriously hard. Okay, so zooming into this example that we have here. Okay, so we have this other block that is up here. Okay, so price goes up to mitigate it. Price goes up to mitigate it. Okay, price goes up to mitigate it. Okay, so and right before price mitigated it, there was just a run up, quick run up. So just green candles, all right, before that place was mitigated. So once price breaks structure and continues under the main structural low, okay, so price breaks market structure to the downside. When it's coming up to mitigate anything, it will use the last down candle. Okay, so expanding it so you can see it, this candle. I'll add this candle too because this is from the bottom to the high, right? So on the lower time frame now, these two will be one candle, so I'm adding them together. Okay, so this plus this, that will give us our mitigation block area. All right, so you can see our price came in there to mitigate it before continuing lower. All right, so this concept is quite complex, so I'll take one more example of it. I'll take one more example of it. So you can see a breaker block here. You can see the difference. You can see the difference. So here is a breaker block. We have price going above that high, then quickly reverses. Okay, so we're going to use the candle right before we run up. Okay, so these two will combine as one. All right, combine as one candle, and once it goes into it, the price continues downward. So that's a breaker block. It is different from a mitigation block. Okay, it's different from a mitigation block. So that's a breaker block. Let's find one more example of a mitigation block before we move on to the next, before we move on to the last ones. Okay, so this class has been quite long. Okay, put this on auto. Èmi ti gbéra, oh God. That's not what I want. So can somebody identify the mitigation block inside this box? Can somebody just identify it by looking at the chart? Anybody want to try?
Okay. Okay, let me try.
Okay. Yeah.
Yeah, so on this second high, second lower high rather,
This one.
that range. Yeah, so there are two green candles orange to that. So that red candle there,
Mm,
I think that should be the mitigation group.
yeah, exactly. So this red candle led to the mitigation of the other block up here. There's something sitting up here on the lower time frame. We'll be able to see it. So there's another block inside there. All right. So now that block caused price to break down. So the candle that went to mitigate it will act as the resistance when price goes back into that area. So that's correct. This is the mitigation block in here. So it's just a simple concept, just that it requires practice for you to totally learn it and understand it. So today, you guys may still be confused between all of them, but as you see it over and over and over again, okay, you check it in your charts, we are going to notice it and start to get familiar with the mitigation block. Okay, so this mitigation block goes up, mitigates another block that's in here. Okay, so the other block is not clear on this time frame, but if I go lower, I'll be able to see it properly. Okay, so but it mitigated other block and then price went down. So whichever candle was prior to that would act as a mitigation block, right? So that's just basically it. We could also have used these two candles. Okay, we could also have used these two candles and say that's our order block, but you can see that our stop loss will be very, very big in this case compared to if you just use the mitigation block as a more accurate representation of what price will do. Okay, so you can also take these two as the other block on the 2 hour time frame, but that will be a very big area, okay, compared to the mitigation block, which will be smaller and give you more profit for your effort. Okay, so that's that for the mitigation block. I will not assume that everybody understands it, but I would assume that everybody will go back to study all these things on their charts. Okay, so yes, that's basically it. And then let me squeeze in the last one, even though today's class, I want us to. Okay, we've already reached the end. Okay, let me just talk about vacuum and rejection blocks before we end this teaching. Okay, before we end this teaching. So, um, vacuum blocks are basically imbalances. Okay, vacuum blocks are basically imbalances. They are basically imbalances. So let's say we have a candle. Okay, price moves up. Okay, it did not mitigate this previous candle. It did not mitigate that previous candle, and it kept on going higher. It kept on going higher. Okay, kept on going higher like that. Okay, so once price starts coming lower, okay, once price start retracing, this place will act as kind of like an invisible order block. It might act as something sort of an invisible order block. All right, so um, let me change the color of that. Okay, so it might act as an invisible order block that we call a vacuum block. So it's a vacuum block. So what a vacuum means is when you think back to probably your secondary school teachings, a vacuum is something that there's nothing inside it. So a vacuum block is a place where there is no price action. There is no price action. There is no price action. Okay, so vacuum block. Okay, so once price, we're expecting price to now come inside that vacuum block. All right, okay, respect the vacuum block. It might go beyond it a little bit because that place is basically an imbalance. Okay, this thing rarely happens, but sometimes it would happen, especially at the beginning of the week. Okay, so we expect it to go down in there and then for the trend to now continue higher. Okay, for the trend to continue higher, for the trend to continue higher. All right, so we'll now expect the trend to continue higher. All right, so once we touch in the vacuum block, it will continue higher. So this thing usually happens at the beginning of the week. Sometimes you would see that once the week after the weekend, you will see a gap in price. Okay, you see a gap in price. This is what many traders used to use and make money. They call it Monday trading or something like that. Okay, so once they see a gap like this, they would, if they now see some buying opportunity, okay, they could buy it and use the end of the vacuum block as their take profit. Okay, so they could just buy it, and once, let me say their buy is somewhere here, they bought somewhere here. Then once the price goes into close the vacuum block, they will take their profits. Okay, so once we get up into the vacuum block, that will be the end of the trade. So let's try and see if we can find examples of such things happening. Okay, so today,
Well, if you're saying vacuum blocks,
yeah,
it means okay, are you referring to like gaps in
yeah,
price?
there are just gaps in price. That's vacuum block. Just
Well,
gaps. Yeah,
I'm not saying it's not possible, but on crypto players usually see gaps, except maybe if there's a pause in trading, maybe because of maintenance, or maybe you want to check um maybe 1 minute or 5 minutes. But if you're looking at this thing, what's the name of this CME? You know this CME future
yeah,
from Bitcoin. I think that this kind of relates to what you're trying to explain. But from my own experience with CME gap, some once price moves into a gap,
Mm.
the price tends to bounce from that.
Yeah. Yeah.
So maybe you can check the CME futures chart.
Okay, this is crypto. Okay, I forgot I'm even checking the crypto chart. Sorry. I was looking for the weekend. Let me just try
Yeah,
GBP USD for example. GBP USD. Let me try that one for example. Okay, so today is Friday 26th. So that'll be on 22nd ish. Let me see if there's anything we can notice. So 22nd, 19th. This thing has Sunday trading inside it. They have Sunday trading. Or let me check. Forex.com. Check these guys. So we're looking for 26th, 25th, 24th, 23rd, 22nd. Okay. All these brokers have Sunday.
you have not gotten in.
I've not gotten any. I'm still trying to find one. I don't
Yeah, I
think
was
that.
saying you should maybe check the CME charts for Bitcoin futures to be able to get gaps for daily.
Okay, there's a lot
And
of
then
that.
maybe
Yeah,
check
yeah.
on that US
Okay.
index.
Yeah, yeah. It's here. Plenty of it. Okay, you guys can see the charts. All right. So you can see this area for example. Okay, you can see this area for example now. Okay, so here price left a gap there. Okay, so there was this candle here, and then instead of continuing here, left a little gap. Okay, left a little gap. Price traded in. This was the initial gap here. Okay, but price traded into it a little bit. Okay, and the gap was never closed. So on the next candle, you can see that the price ran into it and closed the gap before we continued the trend. All right, so that's an example of a vacuum block. I think it's easy to find them in these charts. All right, easy to find them here. So here we have another big gap. We have another big gap. We have another big gap there. All right, so price came in, did not fill it in totally, came down into it, a very deep, came deeply into it, but didn't totally fill it. All right, didn't totally fill it, but continued higher. All right, so many examples in this chart. Okay, many examples. So you can see this place as well. Okay, so price has to come in to cover that inefficiency. Price has to come in later on to cover that inefficiency on the upside. All right, so price would have to cover the inefficiency. It might take long, it might take forever, but price will still have to balance it out on uh the other spectrum of price. All right, so yes, that's basically how it is. So price will later come back to deliver it for the upside of things. So price will later come up to close that in. All right. So once we see a vacuum block, a place where price has left open, okay, you can easily, once price starts pointing towards that direction, okay, so once we start a new trend going to the upside, you can easily buy it and use the vacuum block as our take profit. Okay, so let's assume that this was a strong downtrend. The price may have just continued bearish after closing in this vacuum block. So that is what a vacuum block is. A vacuum block is just simply an area in price where we have gaps, like this. Okay, so those are vacuum blocks. So there are places where there was no price action taking place in that area. So that's a gap in price. That's basically what a gap is, and that's a gap is what we can refer to as a vacuum block if it is in the direction or in favor of the trend. So that's all for vacuum block. That's all for vacuum block. 916. Okay, let's just end it with the rejection block. Okay, rejection rejection block. Um, Getting exhausted. So rejection block. A rejection block is an area in price where we have a lot of wicks. Price price will typically run liquidity liquidity at the bodies of those candles and use the wicks as other blocks to continue the trend. Okay, so that is basically, so when you see plenty wicks, lots of wicks, okay, price will just dip into those wicks and then continue the trend. So that's basically a rejection block. So basically with rejection blocks, you can go to a lower time frame and find the actual order block. You can go to a lower time frame and find the actual order block, but sometimes you may have reached the limit, okay, or maybe let's say you don't like going below 1 hour chart because that is the lowest you go for your lower time frame analysis, okay. You might see rejection blocks, you might see wicks, okay. You can simply expect price to go above the bodies of those candles and then use the wicks as a rejection block for you to continue your trend to the downside. You can see example of rejection block in here. You can see these wicks over here. You can see these wicks. Okay, you can see these wicks. You can see how the wicks were used to continue lower. So price uses the bodies of those wicks because in here there was a consolidation that lasted for some time. Okay, so the bulk of the volume of those trades happen within the body. So most of the trades happened within the body on most brokers. Okay, because for different brokers, the wicks will just be like, you might find different length of wicks for different brokers, but the body will be relatively the same. So they might just take out liquidity at those bodies. They might just take out liquidity. They might use the body as liquidity in this case. All right, and then the wick will now act as the other blocks. Okay, I will call this a rejection block. Okay, so this is a rejection candle, and then we use the wicks as a continuation move for the trend. So that's what we call a rejection block. That's what we call a rejection block. So If you go down to the lower time frame, you might find an actual order block there, or you might not. Okay, but if you decide that this area is a good place for you to have sold from, then you can easily use that as a rejection block to trade off of. But I don't usually use the rejection block. I like to go lower time frame to check it properly. Okay, but if you don't like that, you can simply do it in this manner. Okay, so we have another one inside here. You can see this. You can see this. You can see these wicks. So liquidity was taken out here, and the wicks were used as a rejection block, and price continued lower in that case as well. All right, so anywhere you see long wicks, especially if there are many of them in one concentrated area, they might be used as a rejection block for price to continue or to reverse for some time or permanently, okay, for long-term purposes. Okay, so that's basically what a rejection block is. Okay, I personally don't use it much. But um, ICT, other ICT traders might use it. Other ICT traders might have more experience with it. Okay, so but personally, I like to go in and check more clearly. Even though sometimes when you go down to the lower time frame, you might get more confused. So that's just the purpose of this. Okay, so that is the rejection block right there, the wicks of the candle. All right, so that can also act as an order block for it to continue higher. Okay, so that is our rejection block. That's our rejection block. So this one happens very, very often, very, very often. Okay, so I'm happy that I've come to the end of my teaching today, Sha. Today was longer than the last few classes that we've had. Thank you guys for staying to the end. If you have any questions, please ask before we close the day. Questions, contributions, suggestions.
I don't think I really have any.
Backing block.
Not, not everything really sound cool, but maybe when you watch
Yeah,
the recording again.
that's expected actually because these things when I learned it, all of them were separate videos. So I'm sorry to just dump it on you guys all at once, but we don't have enough time for what I want to achieve here. Understand? So that's why I'm just rushing it. Later on, as we trade, you understand, we will use these things in our trading. So, but you guys should just try and watch the videos over again. Okay, you can watch one segment where I spoke about one type of order block. Go and look for several examples of that other block, and then you'll notice that you get better at it. All right. So I think I'll give you guys assignment today because I've taught you guys something new here, and I'll need to know if you guys understand properly. But before we give our assignment, let's ask our questions if we have any questions. I guess not, Abi. Okay. All right. So for our assignments, you'd find 10 examples each of all.
Oh, it's almost.
No, calm down. I know what I'm doing. Just chill. 15 examples each of uh all the other block types
Let's see.
discussed. Discussed. All right. So that is going to be um propulsion,
Do you
propulsion.
have maybe one example
So 15 examples of each block.
I
Break.
mean, yeah, at least one, at least get some from maybe all of them must be included with the examples.
Yeah. Breaker, reclaimed, mitigation, reclaimed, mitigation, rejection. I don't really need it to find me vacuum blocks because we won't really use it much. It rarely happens. I don't even trade such things. So I'll just leave the vacuum blocks. Okay, so find 15 examples of each, all right? And then, let me say then, take three screenshots, three screenshots each of the examples you find, of the examples you find, so I can critique them. So I can critique them. So I can critique them. All right. So that's basically the homework. So you find 15 examples of 15 examples of mitigation, 15 examples of rejection. All right. So all this one you study it on your own. I'm saying 15 examples so that you understand it better. Okay. But take screenshot of only three so that I will not stress you guys and I will not stress myself as well. So just take three screenshots of each. So you are taking three proportion screenshots, three breakers, three reclaimed, and three. So that's five of them. So yeah, basically presenting me with 15 examples in total, three from each type. Okay, so that's basically the assignment, and you guys can submit by Sunday. I think Sunday is cool. This assignment, Sunday is cool, right? So by Sunday night, I will stop checking the assignments, all right, so that we can start uh new content or new you can start trading by Monday. All right. So just take three screenshots of each of them and then send to me. But try and find up to 15 on your own so that you understand it better. Okay. So find 15 for your own personal understanding. So yeah, that will wrap it up for tonight. Thank you guys for staying to the end. And I will see you guys.
Sorry, Caesar, you said take three screenshots. I
Yeah.
don't understand of each of them. Like,
Of
I don't really get what you mean.
of each of all the other block types. So of each of the examples of other block types. Okay, so that means that you take three screenshots of proportion blocks. Find of the 15 proportion blocks that you find, take three screenshots out of them and put it in a PDF. Take three screenshots of breaker blocks, that's three different breaker blocks, put it in a PDF. Three different reclaim blocks, put it in a PDF. Three different mitigation blocks, put it in a PDF, and three rejection blocks. So that will be 15 examples, three of each of those types. Do you understand? Okay, so yeah, that'll wrap it up for tonight, guys. Have a good night's rest and see you guys tomorrow.